Good weekend, all. I'm Epstein, and here we are with your SPDR ETF stock market wrap-up. And this wrap-up is for Friday, the 14th of July, 2023. And this is your weekend edition, which means we get to look at weekly charts. Now, the first thing I did is I threw out Hyatt. I went back to Amazon because that's where the action is. Hyatt has been acting good. It's still dropping down here. And it's not a sell or a buy. It's sort of in no man's land, but Amazon's been exciting. Why? Prime Day. And the most successful Tuesday they've ever had. It's interesting what people were buying, not high-priced items, much of the mid-price to the low-priced items. And that'll change how now, what will happen is, as a retailer, Amazon will use all that information to figure out the October sale they do. And then, of course, what do they do for the Christmas sales? But they're smart. They'll figure that out. That is why Amazon was up today. Not stellar, but still up and held. We finally saw a couple of things happening. NVIDIA got to, 480, and then came back into the 450s. So profit taking finally hitting that one. Okay, it's about time. In the auto sector, we're still seeing Tesla good, but most of the others are giving money back here. They've had a nice run. There's some problems. Even with the big earnings from Delta the other day, profit-taking set in today, and that's what I would have expected. I wrote, in fact, and I said, I would expect reversals on Friday after the big gains we've had. I don't know about the banks. And when the banks came out, it carried the Dow because in the Dow 30, JP Morgan is there. But if you look at the other indices, they gave up some ground. That doesn't mean you've peaked. It just means money coming off the table in front of the weekend. It's been a heck of a run. And remember, we've just now gotten to the point where we're digesting the friendly jobs report, the friendly CPI, and the friendly PPI. So you put all that together, a half a point decline on the core CPI, that's something to talk about. So when I looked at Amazon, as you can see, a huge move, and this is the prime week. That is what happened. Market came down. As soon as word came out, the sales were looking good. The market lifted itself right on up. The pattern is higher lows, higher highs. What you don't want to see is this week's low taken out in the next 2 weeks. If it is, it would be a sign the market wants to retreat, and maybe as low as wherever the 18-week average is, so be cautious. The market is fighting a battle at the combination of the 100-week in green, the 200-week, and the Bollinger Band right up here. That's where the market's at. Do I think pros are taking money off the table? You betcha. I think they're going to do that. Embedded. So what do I think on pullbacks? I think that if you drop this week, the pros will want to buy the market again with stops under that low and see what the market's made out of. That's what I'm expecting. Schwab, remember I told you just recently how much volatility is coming out. The response from the lack of volatility and price is what's causing the Bollinger Bands to narrow in just like that. Now, I haven't seen how Schwab did on earning money yet. They haven't reported. We'll see. I didn't like that State Street Bank didn't do all that well. JP Morgan hit a home run, and then it was lower grade at Citi and Wells Fargo. Nothing like JP Morgan. They're like a Lamborghini hitting on every cylinder you can imagine, from lending to interest income. It's just good to be Jamie Dimon. What can I tell you? But you're at a resistance point. You're coming up to the 200-week average. You're at the upper Bollinger Band. Nah, I don't think it's a buy there. I think pros are coming out. Be careful with the smaller banks as we start hearing about the regionals and so on. You've had a nice short covering rally, and you've instantly gotten yourself into overbought territory on it, on both the KBE as well. So both of these problematic, and you're in the key resistance here. I'd be ultra cautious. I'd be shocked if these regionals did real well. If State Street didn't do well, how could they? That's my own thinking on it. In XLI, this is called running the upper Bollinger Band. It's the Gorilla Glue trade. It's when you get married to it. And I admit, I said it on the dailies, I'm saying it here. Suddenly, the industrial sector is alive. Why? It's taken me a while to figure it out, but I think I have it. People are absolutely convinced that the recession's going to be ultra shallow. This market had been going sideways for a long time, and now they're saying, people are going to have money. If you get a recession, how bad will it be? I realize that you're still getting companies that are like coming out and they keep saying, hey, your earnings are going to be a disaster. You wait how this thing's going to roll over. They may be right, but so far the bank earnings today were pretty darn good. They can't say that those were bad. Those were good, but it's the beginning. We got to go through a whole slew. We will see. So far, everybody that has been bearish this market has been wrong to a letter. So we will see what happens. I do like the concept, though, when you look at long-term interest rates, that they're going to come down, so owning bonds might be a smart thing for appreciation value. In XLE, higher lows, higher highs. This could rally a little bit here. FXE, you're up to the resistance of the upper Bollinger Band. Going to fight. I'm sorry, I'm not going to get off camera. I'm going to finish this up. And I still look at the market as being overbought. Do you buy over a Bollinger Band? I don't think ever. In gold, this is the resistance. You're coming up to a key number here. I would not hold on to that. I would think you've got to prove to me that you can get over 184.21 and stay there. So it's a nice bounce, but it's not yet the sign that the gold market's ready to run. You've had your short covering rally now in the gold miners. You have to get over 32.24 to negate the downtrend and then do a bit of work to get bullish, in my opinion. In Tesla, never-ending story. It doesn't stop. Now, they're going to be doing, I understand, putting out some debt of type. We'll see how they do with that. This is riding that Bollinger Band. It's a very bullish sign, especially when you force the embedded reading. So on pullbacks, I'm still looking for support against the 100-week average. Now, I'm nervous about AMC. And that's because, number one, you just don't even bounce on the slow stochastic. Both numbers finally got under 20. If you get 3 weeks of that, this market, I think, will crater, and I think you're going to be in big trouble. It needs to get Barbie, got to help it. You need to get Mission Impossible. You need to get Oppenheimer, and of course, Indiana Jones. Quite a feat. If this can produce the money, great. If it can't, and this stock can't bounce with that, it only gets worse after that, because when the kids go back to school, you don't get really big movies until Christmas time. And this chart is acting bad. That's simple. In Apple, I like Apple still. Embedded reading, I think the market's going to get bought. I think the pros dump it if the red line closes under 79. And until then, I think they're going to use these breaks to keep buying the market. In Google, you had your correction. The market lost its embedded reading. It went down to the key averages of the 100 and the 18-week average and held them. I think it's in pretty darn good shape. So when I look at all this behind me, I'm getting sort of excited in what I'm seeing, because breaks in the market are still the buying opportunities, period. Okay, and I'm even surprised I'm saying that, but it's true. And until the market can prove. Likewise, what I'm seeing is all the headwinds are gradually fading. And I know we're supposed to go into recession. Where is it? I know we're supposed to be getting poor earnings. Where are they? Okay, that's the point that I'm making. Now, you see me talking Bollinger Bands here and that momentum all the time. Do you know how to work with it? I have a course on it. You're going to click up here at any point from this point forward. It'll take you to that area. It's going to be a course that teaches you in 13 chapters, they're videos, how to do what I'm doing, how to work with your slow stochastic, how to look in the morning, see what the markets are doing both on the weekly charts and where do you take it. Remember, the idea of the slow stochastic is the market will trade within them 95% of the time. You don't want to be the guy saying, this is the time it's going through it. The one time you're right, or the 5 times you get right, 95 you're going to be wrong. That's what the percentages are, and that's how the algorithm is built. So how do you work within it? To me, it's so simple. Watch this. Remember, click up here, learn. I'm Ira Epstein. I'll be talking to you as I'm in Montana. I won't be on these films with you, but I will be putting these out as best as I can while I'm gone. Have a great weekend. Welcome. I'm Ira Epstein, and I'm here to talk about my enhanced Bollinger Band course. Now, many of you have taken my regular charting course, and if not, you might think you know something about Bollinger Bands. As you know, Bollinger Bands are an algorithm designed to keep the market trading within it 95% of the time. And on a chart, it will offer on the top part resistance, on the bottom support, and the idea is the market will travel within them. We know that sometimes it latches onto that band, goes up or goes down. Well, how do you play with that? Can you pyramid the positions off that type of thinking? Well, I've applied all three of these into 13 different videos that teach you my concept of it. And from that concept, you're able to work with weekly charts and or daily charts. The 13 videos, each about 7 minutes long. The idea here is not to put you in school forever, but to teach. Now, if you haven't tried my complete futures research, I throw that in as well. Whether you've tried this or not, I think it's worth taking a look at. I think you're going to learn something from there. That research, by the way, covers twice daily market updates for you and access to what I call window envelope numbers, which I think are very important when looking at these Bollinger Bands. The next part is a trial to our charting software so you can make your charts look the same way that mine do. It's that simple. Where do you go with it and how do you get all this? It's simple. You go to our website, www.iraepstein.com. If you go to the word education, everything you need is answered there. You can also call my staff. They'll be happy to help you get set up. I'm Ira Epstein, on the road to your education.